What's up, my fellow traders? In this video, you're going to learn how to pass an evaluation. This video is targeted towards trailing drawdown evaluations with prop firms. I'm going to give you my 5 rules for success. I'll be live trading in this video, so you actually get to see me applying these rules and explaining to you in the charts while the charts are moving because it is live, and I pass an evaluation to prove this works. These 5 rules will help you pass any prop firm evaluation, not just ones with trailing drawdown. So if you're ready, let's go ahead and get to it. All right, first off, before I teach you how to trade with trailing drawdown, we need to go over how it works. This is a common thing that people don't understand, which it is confusing and complicated, so I definitely understand. Okay, so here's your starting balance. Here's your drawdown amount. Okay, so when you start, before you take any trades or anything, your trailing drawdown is at its highest point, meaning it is going to be trailing you as soon as you go into profits. And we're going to imagine that this is your balance that is moving up when you're in a trade. So let's say you take your first trade and it goes really well, and then before you exit, it comes back down a little bit. The highest point of your balance when you were in the trade was 51,000. And then where you took profits was 50,800. So you allowed the price to come from your highest point down $200. So now, where do you think your trailing drawdown is going to move up to? Do you think it's going to move up to $1,000 higher, or do you think it's going to move up $800 higher? This is where people mess up. If you're in the camp that thinks it is only going to move up $800 higher because that's where your balance is at now, you are mistaken. It is going to move up from 2,500. It is going to move up $1,000. So that is going to be 48,500. And now it doesn't matter if you go and draw down more, it is going to stay right there no matter what until your balance comes back above 42,000. And then at this point, it would start moving up again. Hopefully you understand how it works now. It's going to ratchet against you anytime your balance is at all-time new high, and that's when you want to be selling into strength. When you're in drawdown, you can go ahead and hold the trades and shoot for bigger winners, but you need to be scalping when your balance is all-time new high. Hopefully you guys understand that. This next part is the live trading. I immediately jump in, kind of explain what I'm looking at, and then we start going through these 5 rules in the charts live. All right, guys, I have an Apex trader funding evaluation. I'm up about $897 in the account as of now. So let's get the live trading on. I'm going to show you guys how to pass an evaluation step by step. I'm going to show you my 5 rules for success. Number 1 is only risk 10% of your current drawdown. You can see that I'm in a trade now. I always calculate the amount of risk that I'm going to be taking on the trade. And if it is over 250, then I need to size down. You never want to be risking more than $250 if you're in a 50K account. This is going to allow you to be able to lose 10 trades in a row, which the chances of that are pretty slim, I would say. In trading with futures, you're going to be over leveraged from the jump. Before you even put on a trade, you're over leveraged because the notional value of one NQ contract is $317,000, which with the 50K account, that means you're trading with 300% leverage. The next rule is you must scale out at 1.5 times your risk. So you can see here, I already exited one because I'm well past 1.5, but 1.5 risk will allow you to profit on the trade no matter what. If you get a scale out at 1.5 times your risk, if it comes back and stops you out, you will still have gained 0.5 R. All right, so if price decides to retrace back up here, I think price is going lower to this black candle, but if it retraces back up higher, I am going to add back onto the trade. I'll add back that one that I took off because I think price is going lower. So let's see what happens here. Up 58 ticks, 57. Okay, so there. I'm gonna go ahead and add on now. And there we go. So now I've added back on. We have our first risk, only risk 10% of your current drawdown. The second one is must scale out at 1.5 times risk, because I don't know anything else that allows you so much leverage when you're trading an edge. It mitigates your risk. It guarantees a winning trade. It allows you to calm down. All right, now I'm going to start measuring my stop, where my stop should go, and then looking for where 1.5R is. Okay, so 1.5R is about at the low here, and when price drops down here, I'll go ahead and take it off, because that's proper risk management, guarantee me a win on the trade. So earlier I had 70 ticks, right? That's $350. All right, so here it goes. It's dropping down. I'm going to take one off, and then boom, it's almost to my profit target now. The way I trade and the way I think you should trade is let price expand downward. I'm pretty positive price is going to go to where I have outlined. So anytime it pulls back near my entry price, I will add on. That's not a rule, but it's just a general smart thing to do. All right, so now it's retracing back up here, right? So it's time to add back on. I like to use trend lines in my trading. So if it touches that trend line, it kind of like rolls over, I'll add back on. And then we'll get into rule number 3. All right, I went ahead and added back on there. And then my stop's just going to go right above there. I'm not going to risk very much when I add on, because it can go south really fast. So 6 times 4 is $240. So I'm risking 6 points with 2 contracts. That is within my risk parameters. Let's go ahead and measure. This is your best friend in your trading that you're going to find. There is no better tool, because it allows you to kind of like measure your risk and decide when to exit based off of risk management instead of just guessing. Because what you're going to do is naturally feel like you should just leave it on or take it off faster. All right, so there's my first profit target. Now I want to see how it reacts here. Is it going to flush it, or is it going to bounce? Boom, it's flushing it. So if you want to learn how to trade, it's going to keep going lower. But if you want to learn how to trade, I will put the link into the description to my second YouTube channel. And I do lots of live stream trading where you can trade with me. All right, so I'm going to take a little break here, and I'm going to go ahead and pause this. And then, yeah, 27 ticks. And when I'm taking the trade off, on pause the video, and then we'll go into rule number 3. Okay, so I didn't have to pause it very long before it started rolling over. I thought we'd get a big push. All right, it's going to displace quickly here now. There we go. All right, so now I don't want to be a pig. I want to exit into strength to keep the trailing drawdown off my back. So now I'm all out, and this is going to be rule number 3, which is going to be, all right, so I'm up $1,227. Sorry about that, I had to check real quick. All right, so rule number 3 is going to be, don't be a pig. You're going to sell into strength. The bulls make money, the bears make money, but the pigs get slaughtered. Don't be a pig, guys. I know in my trading, I'm sure you have, where you get greedy and you usually end up regretting it. I can think of 100 times where I've been close to finishing an evaluation. I'm like, okay, I'll just push it a little bit more, and then I am paying the price for it. All right, so yeah, I'm gonna take it off here. See, I saved my stop. That should really be another rule. Save your stop, guys. It's the most power you're ever gonna have. See, look there, I didn't even take very big of a loss because I saved my stop. It'll make you feel better about your losses too. That's the main thing I found, that it made me feel a lot better about my losses. Because I know, and you know, the pain of getting stopped out, it sucks. It's not a good experience. And if you take too many in a row, you can go into what I call tilt, where you just start making really bad decisions based off of your thing. So there we are in a 3-minute. You can see the trades I've taken. I turned the executions on. All right, so I went short there. Try to figure out where to put my stop here. I think above there. so I'm not going to risk too much. Trading View's little stop thing isn't working. I tried to put it on, it never works. So you have to put it up really high and then drag it down. All right, so as you guys see, I'm slaying it. We're almost finished with this evaluation. I'm going to go ahead and take a break here after this trade. I only trade for 30 minutes at a time, which is very, very important. All right, I will go ahead and pause this recording, and then we'll put it back on once I... all right, I'm going to take one off there, actually. It's happening a lot quicker than I thought, but I'm going to go ahead and take a break here, and then when I'm ready to take this trade off, I'll turn on the replay again, and we'll go into rule number 4. All right, so prices dropped down. I really don't like how it's looking right now. I think I'm going to go ahead and exit this and save my stop. See how it's popping up there? Yeah, I'm going to go ahead and exit this now. All right, so see, once again, I saved myself a bunch of money. If I would have forced that trade there and let it hit my stop, that's 3 extra points it would have costed me. 4 maybe. That's quite a bit of money. All right, so I'll go ahead and pause the recording, and once I get into another trade, we'll restart it. And because I trade on such a low time frame, I get lots of opportunities to trade. So I'm going to go ahead and go long here. I like how it looks. Measure where I'd get out. A lot of times I'm putting my stop like at an emergency, like a flash crash occurs. But then other than that, I've developed the ability to get out of trades when I can see that they're going the wrong way, right? Not saying it was easy. I took a lot of fucking practice, like a lot. I spent a lot of time being a degenerate trader. I couldn't even exit a trade manually on my own ever. But eventually you develop it if you practice enough. And you guys can do this. I promise you, it is possible to make a living. It is possible to quit your job. It's possible to retire if that's what you don't want to do. Whatever you want to do, you can do it. Whatever your trading goals are, retire, extra income, whatever that is, you can do it. I promise you that. All right, so price, I went ahead and exited earlier because my target was right there and it's already hit it. I do think we're going to blast up here now that I'm looking at it a little bit closer. You see how it's flashing upwards there? Yeah, definitely think it's going to flash here upward. Yeah, there you go. So it should go right through this trend line, I would think. Back to what I was saying, though. You can do this, guys. I promise you. If you put the work in and you keep at it, you're going to go through 2 cycles. The first one is you're going to fail evaluations over and over again until you learn to play the game and follow these rules. And then you're going to go into the second phase after you pass a couple of evaluations. You'll realize they're not that hard to pass. The mental block removes, and then you're going to get your funded accounts and you're going to go through the same fucking struggle. I failed so many evaluations. I'm talking hundreds. And then I failed 20, maybe 30 funded accounts as well before I got a hang out of this. Okay, I'm going to go ahead and exit here. Is it going into the second level here? I have a feeling we're going to get a pretty deep pullback, and I don't want to have to hold through that because that would be 50 ticks of profit lost. All right, so there we go. Good. Yeah, I don't like how it rejected off that area. I thought originally it was going to maybe expand up to here, but yeah, I don't like how it looks. Yeah, see that doji? Yeah, I'm getting out right there. So I should have, I hesitated a little bit there. And that's because I'm getting tired. I've been trading now for about 34 minutes or so. That's longer than I like to trade. So I'm going to go ahead and take a break here. I have a one-on-one session to do. I do like that trend line trade though, but and then we'll come back to this video and I'll finish up this evaluation, go ahead and pass it. We only need about $500 more here, so be right back. Of course, for you, it's going to be instantaneous, but for me, it's going to be a while. All right, so now here I'm back. It has been quite a bit of time, maybe over an hour and a half or so. All right, so we have rules to pass. Number 1, only risk 10% of your drawdown. Must scale out at 1.5 times risk. Number 3 is don't be a pig and sell into strength. And number 4 is going to be probably the biggest one, the one that made the most difference in my trading. I'm talking made the most difference, guys. It is the thing that took me from being a degenerate trader that was struggling to being a profitable trader pretty much overnight as soon as I implemented this rule, which is going to be no trading for order over 45 minutes at a time. The human brain is not capable of making high level decisions for very long at a time. So you can make a decision, wait 10, 15 minutes, make another one. You could do that all day. But if you're a low time frame scalper, your ability to do this for long periods of time is not true. And you're going to ignore this. I already know you're going to ignore it because that'd be taking away your dopamine hits. What trading does to the brain, because it is a random rewards, it does the same thing as fucking gambling. Believe it or not, it is doing the same exact thing on gambling. If you want to learn more about this, check out the book, The Hour Between the Dog and the Wolf. It is going over your chemical reaction when you're trading. So I'm talking instantaneous. Like, it took a while to develop the discipline to stop at 45 minutes. But once I did, straight up, I'm no joke, I went from blowing up an eval every other day to passing an eval every other day. Set a timer and then only do that. Set it for 30 minutes, and then when 30 minutes is up, get out of the trade you're in after it hits your profit target or whatever, and then take a 30 minutes to an hour break. All right, so we're getting here at 1.5. I'm going to exit one right there. And boom. Killing it, y'all. Oh, all right, I think price is going to pull back here any second. That's the third push up. If it comes back to my break even, I'll give it a little bit of that, but we only need $300 more to pass this evaluation. So I don't want to let price come against me at all. So if it pulls back like I think it's about to, I'll just go ahead and exit. All right, so yeah, see how it's breaking that trend line? Pretty clear there to me what it's going to do. We'll give it a second here, though. If it comes back to here, though, I'm going to have to exit. All right, 9 ticks. Yeah, I'll just go ahead and exit there. 5 ticks profit, which is better, right? That's better than losing money. Save your stop. Save your break evens. It may bounce here, then that's okay. I can get back in if it bounces off the top of that candle. Let's make sure I have this trend line right. I see you, motherfucker. All right, I'm going to go ahead and get back in. I'd rather do that than have a trade go against me and will wipe out my profits for the day. All right, so price is curling around. All right, there it is. I'm going to go ahead and enter there. And then, like usual, I'm not going to risk more than $250. So my stop's there. That's kind of big. I won't let it hit that, though. So 14 ticks. 4, 8, 12. That's 3.5 points. Yeah, I'm going to go ahead and exit there. I don't know. We'll give it a second here. Yeah, I'm going to go ahead and save my stop there. So, all right. I'll go ahead and fast forward it when I get back into a trade, and we'll get on to rule number 5. All right, so I'm back. So let's go ahead and do a little review of what we have here for the rules of success. Okay, number 1, risk only 10% of your drawdown. Number 2, scale out at 1.5 R. The pigs get murked. Number 4, only trade for 45 minutes at a time. And then number 5, which some of you guys are gonna get your panties in a bunch over this one, but only use market orders. If you watch me trade, I never ever use limit orders other than for my stop losses. All right, I'm gonna go ahead and scratch this trade. I think it's gonna come against me. All right, took that trade off. Now I've added 4. I'm about to take one off here because it's already hit my 1.5. Yeah, so you see right there, almost. I'm only risking about 2 points on the trade. That's why I have 4 contracts, keeping my risk about the same, $250 per trade. I took another one off, and then now only leaving one on. Just leave a runner here, and I'll explain why you should only be trading market orders. It's going to be quite shocking to some of you, I believe. All right, I'm going to go ahead and pause it here, and then when I'm about to exit this trade, I'll turn it back on. All right, so here we are. I added back onto this as it broke that trend line. Now I'm gonna sell one here, and now we only need about $150. All right, so why is it better to use market orders? Let's break this down while we're waiting for this to finish up here. I'm gonna go and add on real quick though. All right, let's just finish this eval and then I'll break that down for you guys. All right, let me adjust this. Okay, I added back on here. Now I think it's gonna go up to there. Still only need about $150 here. So I've finished this on this video, guys. Like, find me another dude that's doing this. All right, I'm gonna take one off right there, and almost there. Let's see here. Okay, let's push up should do it here. Maybe I should add another one on. I don't know. We'll just see what happens here. I'm gonna get ready to exit though, because it's only $50. It's only a couple ticks really. Well, I guess it's 10 ticks actually, but fuck it. I'm gonna add another on. Okay, so I'm gonna add 2 on here. I think it's gonna expand upward here. There we go. $53,035. Whoop whoop. All right. I knew I'd pass one here because I'm in tune with the market today, but there's still that like question. So that's $2,145 in this video, guys. You know, pretty confident, but let's go into why. And just the time I was making this video, but let's talk about rule number 5. Only use market orders for entry and exits. Now I'll explain why. Let's say this blue line is our point of interest. This is where you think price is going to reverse, right? This is where you think it's going to reverse at. And I want to make sure you understand. We think this is where it's going to reverse at. You don't know. No one knows 100% if it's going to do anything. So let's say you don't know. So let's say you put your limit order right here. So you put your limit order just above the zone that you've drawn. So it comes down, it goes past here, but where do you put your stop? You're going to base it off a price action to the left, maybe. You're not really sure where to put your stop because it could go past your zone. So let's just say you're going to put your stop at the bottom of the zone at 23. So you're risking 10 points, right? Price comes down into here. Maybe it hits your stop, maybe it doesn't. You don't know because you're guessing. But what if you don't put a limit order there and you patiently stalk the setup? What if price comes down, the lower low, comes down into here, starts slowing down. It's making lower lows, it's getting tighter, has one last big push, and then pops up like this. Let's say you saw this. Okay, so let's see, it comes in there doing this. This is your third push down, hit exactly where you thought it would. We're going to put our stop right here. We're going to enter into the market, which is going to put your entry price right here. So there's your entry price. Here's your stop. So now our risk is 31 to, so 5 points. So if you don't remember, with the limit order, you were risking 10 points and you didn't know where to put your stop. You're just guessing. You didn't know where price was going to reverse. You were just guessing. All that is a guessing game. And the reason you're playing this guessing game instead of just doing it this way is you're being greedy. You don't want to spend the 1 tick spread between the bid and the ask in futures, which is $5 fucking with NASDAQ. So you're being so greedy that you trying to save $5 because you don't want to buy at the market. But you're costing yourself if you get stopped out 5 points, right? If you would enter the market, you could have had a 5-point stop loss. And then if you enter with the limit, you're risking 10. So we'll just go ahead and call it $100. So you're willing to risk an extra $100 just to save $5. That the math doesn't add up there, does it? No, it doesn't. And now we know exactly where to put our stop, which is going to be just below the low because that's where we entered at. So if it goes below that, we're wrong. This is called trading on the right side of the V. This is what responsible traders do. You can do it with a limit order if you would like. So once price pops up here, puts in a higher low, you can put a stop limit order, which would, once price goes back above This high here will put you into the market, and then you can put your stop down there. You can, once you see what you want to see, you can put a limit order into price just below the bid, and then see if price like moves down a little bit and gets you into the market. Those are all viable options, but placing a limit order guessing is not a viable option. Let's talk about taking profit. So price is always in a one of three phases. It's in expansion up, which is aggressive price action up, where it's making really quick price movements. It is in a reversal stage. When it's coming back, it's a retracement. And then, so you have expansion, retracement, and then it goes into a phase of consolidation most of the time. And then it starts this process over again. So in expansion phase, it can continue in this phase for a really long time, where all it does is just go in one direction of micro pullbacks that are of no risk. If you set a limit order, let's say at 2 times your risk, so let's say right here, and boom, cool, that's a good trade. But what if you don't do that and you look at the price action, let the price action tell you when expansion is ending, and you get an extra 2R out of the trade after you already scaled out, mitigating your risk, being responsible? That's way more money, right? And then what if this goes on for 30 points? You know, we're talking a lot of money here. This is exactly how you guys watch me pass this eval at the end there. So 30 times, oh, it's only 12 o'clock. That's $600. So I made an extra $600 just by allowing expansion phase to happen. I'll teach you a way to look to when it stops. I understand some of you guys don't pay for the trading view 30 seconds, so I'll even use a 1 minute. So if you look at the bottom of the closes, so in expansion phase, one of the main characteristics is the low of the candle will not get closed below. So boom. So here's where it starts, right? So this is your starting of it. Now you stay in the trade until the previous candle's low is taken out and closed below. Let's just say you wanted to trade it the way I'm teaching here. Instead of putting a limit order preventing you from making these really large wins that are going to make up for your bad mistakes, your shitty trading and all that. Because let's be honest, we all make errors. So let's just imagine that you did it this way. So you would have stayed into the trade until right here. So from here to here, let's see how much drawdown that is. So that is 5 points. So you had $100 worth come against you, which is cool for a trailing drawdown, that it's within the amount. And you made, let's say you entered here and you risked to the low, you risked 5 points. So then let's go 2R, which is what a lot of you have been taught to do, is to set brackets and take profit at 2R. All in, all out, horrible risk management strategy. But it's not your fault, you've just been taught to do it that way. So you would have made 11 points or 37. Which one's better, guys? So that is why number 5 is use market orders only. Check out my website. In this video, I'm going to show you how to pass an evaluation companies that are trusted. And if they do not pay you out, any of the companies on my page here, I will pay you out. I've been offering this to traders for almost a year now. I haven't had a single person hit me up for it. Luckily, no one's being shady, but I guarantee they pay out. If you were to hit me up and be like, hey, I followed their rules and they're refusing to pay me out, I would pay you out. No questions asked, as long as you provided proof that you followed the rules. You can sign up for my newsletter here. So Bulenox has a option 1, 72% off of all evaluations. Apex Trader Funding, 71% off of all accounts and half off resets. Take Profit Trader, the company that I think's the best right now, 50% off of all accounts. And then once you pass, you get a free evaluation. So let's say you pass, you're funded, they give you a free evaluation. I'm honestly not sure if it's a free eval or it's a free funded account. Sometimes they word it either or. And then TopStep Trader, everyone knows who they are and what they're doing. They're doing some good shit. Trade Day has probably the best payout structure in the game. next to Take Profit Traders. Take Profit Traders is better because it only takes like 4 hours to after requesting your payout to get it, which they're the only ones in the game doing that. And then Tick Trader has straight to funding accounts where they've just upgraded my coupon code, so you get $25 off the 10K, $50 off the 25K, and then $100 off the 50K direct funding accounts. So they're direct to funded accounts. There's no evaluation, and then you get payouts from day one. Very, very good. They also have a trading competition right now. It's like a 2-in-1, so it's a competition, and then if you don't break the rules in it and you hit the profit target in a normal 100K account, you would get a funded account as well. I think I'm going to enter this. It's not too late. You have up until the last day to enter. So I'm not sure when it ends. I think it ends at the end of the month, maybe. And then if you use the code proven, you get access to all that. And on the discount page, like here's the home page. If you go to here, there is this right here. So just enter your email to sign up for my newsletter. Whenever there's a new discount, I send it out, and then I give you some tips and tricks, kind of like this video, but a written one of how to pass evaluations. I share my profits for the month. Last month I shared every payout I got and all that. Just so you guys can see it's possible. Here is my latest payout from Bulenox. And I'm not showing you guys to brag. I'm showing you it so you know it's possible that you can do this. Hopefully to motivate you to keep pushing, because I know at one time I thought that it was impossible to pass these damn things, and then impossible to get a payout, right? So hopefully this motivates you. I made $6,314 with Bulenox last month. To get away from the consistency rule shit, I just take the payout at the end of the month. I use Take Profit Trader to get like quicker payouts because it's whenever I want and really quick. So if I need a couple G's, I just pull it out. But I use Bulenox for that big chunk to kind of pay my mortgage and to save money. You can definitely make a living. You can retire. You guys can do this. Don't give up. I promise you, you're closer than you know. If you want to learn more about how I trade, if you check in the right hand corner up there, you'll see my second channel, and check it out. You can sign up to be a member and have access to my live trading via live streams. Deuces, guys.